Welcome to Hong Kong Brief. The content of the briefing includes Marina Bay Sands said to seek up to 10 billion Singapore dollar loan for growth. Morgan Stanley China real estate banker Li Ren leaves company. Chinese stocks sit out November's global rally on economic woes. Hong Kong stock slip, set for monthly loss, as manufacturing in China shrinks. Alibaba's value dips below upstart PDDs in landmark for China. Marina Bay Sands said to seek up to 10 billion Singapore dollar loan for growth. Bloomberg. Marina Bay Sands, a luxury casino operator owned by Las Vegas Sands, is reportedly seeking a loan of up to 10 billion Singapore dollars, $7.5 billion, to expand its hotel and entertainment business. The resort is expected to begin marketing the deal in the next quarter. If the loan reaches its maximum size, it would be the largest ever syndicated loan in Singapore funded in the local currency. The financing plan comes as Marina Bay Sands looks to rebound from the pandemic and benefit from an influx of tourists, including those from mainland China. The loan will be used to refinance existing debt and potentially borrow an additional 2 billion Singapore dollars as part of the package. Morgan Stanley China real estate banker Li Ren leaves company. Bloomberg. Li Ren, Morgan Stanley's real estate investment banker focused on China, has left the firm as property deals in the country continue to decline. Ren, who was a managing director based in Hong Kong, had been with the U.S. bank since 2006. The volume of China-related real estate deals this year is on track to be the lowest in a decade, as the country struggles with a property debt crisis. Ren's departure follows that of other senior bankers leaving Morgan Stanley in recent months. Chinese stocks sit out November's global rally on economic woes. Bloomberg. Mainland China stocks have continued to decline in November, marking a fourth consecutive month of losses. The benchmark CSI 300 index is down about 2% this month and trading near a 2023 low. This poor performance contrasts with the global rally seen in other markets, such as the MSCI All-Country World Index, which has surged more than 8% in November. The ongoing economic concerns and lack of concrete policy decisions have contributed to the negative sentiment towards mainland China stocks. Additionally, recent data showing a contraction in manufacturing activity and a shrinkage in the services sector have added to the economic strains. Hong Kong stock slip, set for monthly loss, as manufacturing in China shrinks. South China Morning Post. Hong Kong stocks fell for a fifth day, reaching a 12-month low, as a government report showed that Chinese manufacturing contracted more than expected. The Hang Seng Index fell 0.3% to 16,942.81, while the Tech Index dropped 1% and the Shanghai Composite Index was little changed. Alibaba Group slipped 0.8% to 72 Hong Kong dollars and 10 cents. JD.com lost 0.7% to 105 Hong Kong dollars and 90 cents, and Alibaba Health dropped 3.9% to 4 Hong Kong dollars and 44 cents. The Hang Seng Index has declined almost 1% this month, extending a cumulative 15% slide in the preceding 3 losing months, capping a 579 billion Hong Kong dollars, $74 billion, market sell-off. Alibaba's value dips below upstart PDDs in landmark for China. Bloomberg. Alibaba Group is set to lose its position as China's most valuable e-commerce firm to upstart PDD, marking a watershed moment for an industry that Alibaba has dominated for over a decade. The shift reflects the turmoil that engulfed Alibaba after Beijing targeted the company and kicked off a sweeping crackdown on the powerful tech sector. The rise of upstarts like PDD and ByteDance, which are disrupting social media and e-commerce, also signals a changing landscape in China's internet industry. Update 1 China EV brand Zeekr puts US IPO on hold. Sources. Yahoo! Chinese automaker Geely's premium electric vehicle, EV, brand, Zeekr, has reportedly put its U.S. initial public offering, IPO, on hold due to a mismatch in valuation expectations. The decision comes as global financial markets remain volatile. Zeekr declined to comment on the matter. Time for Hong Kong to open its doors to ASEAN talent and capital. South China Morning Post. Hong Kong's future lies in leveraging its strengths as China's most international, cosmopolitan and forward-thinking city, according to Daryl Ng, chairman of the Hong Kong ASEAN Foundation. Ng said Hong Kong should continue to connect China with the world and facilitate the growth of economies in the global south. He added that Hong Kong should serve as an education hub for students from both Northeast and Southeast Asia, and that visa rules for non-permanent residents should be reviewed to attract talent from Southeast Asia. Ng also said Hong Kong should cater to the growing market of Southeast Asian high-net-worth individuals, entrepreneurs and family offices. Global funds favor Asia's higher-yielding bonds over others. Bloomberg. Foreign investors are pouring money into higher-yielding Asian bonds, such as those in Indonesia and India, as expectations of a Federal Reserve policy pivot weaken the dollar and make Asia's high-yield bonds more appealing. In contrast, net inflows into South Korea and Thai bonds have fallen to their lowest level in 9 months. The narrowing of $1 one-year basis swaps is making it less attractive for investors to offer dollars in exchange for the won, and the benchmark rates in South Korea and Thailand are at a discount to the key Fed rate, unlike those in Indonesia and India, which offer an upside. China Investment Bank bans bearish research, displays of wealth. Bloomberg. China International Capital Corp. (CICC) has warned its analysts not to make bearish calls on the economy or markets and to avoid flaunting their wealth, according to an internal memo seen by Bloomberg. The directive follows a clampdown by Beijing on bankers' hedonistic lifestyles and reflects growing concern among international investors that China is restricting access to transparent data and research. Analysts are also warned to be careful when sharing views with clients outside China in order to reduce political and national security risks. Hong Kong to host glitzy Louis Vuitton show and burnish image as fashion capital. South China Morning Post. Louis Vuitton is due to stage its first runway show on Hong Kong's Avenue of Stars on Thursday, with the event setting to burnish the city's reputation as a global fashion hub. The luxury fashion house's decision to hold the event in Hong Kong is seen as a boost for the city, which has seen a downturn in luxury fashion sales since the COVID-19 pandemic. The show will feature the first pre-fall collection by Pharrell Williams since he took over as Louis Vuitton's creative director in February. Dior is also planning to showcase its men's pre-fall collection in the city next year. These are the world's most expensive cities to live in right now. Bloomberg. Singapore and Zurich have overtaken New York as the world's most expensive cities to live in, according to the Economist Intelligence Unit's Worldwide Cost of Living 2023 report. The high cost of car ownership, expensive alcohol, and rising grocery prices contributed to Singapore's top ranking. Zurich climbed from 6th place to joint first due to the strong Swiss franc and high prices for groceries, household goods, and recreation. Chinese cities fell in the rankings due to the country's slow post-pandemic recovery and subdued consumer demand. The study compared prices in 173 cities globally. China's shattered property bond market finds hope in Sunak deal. Bloomberg. Sunak China, the country's third-largest residential developer, has secured a restructuring deal with creditors, marking the first such agreement by a major Chinese builder since Beijing's deleveraging push 3 years ago set off a historic industry crisis. The deal offers a potential roadmap for other distressed developers, many of whom are facing the threat of liquidation. Sunac, which had total liabilities of more than 1 trillion Chinese yuan, $140 billion, managed to win over bondholders by actively engaging with them and demonstrating its willingness to consider all options. Under the agreement, Sunac's debt will be reduced and the stake of Chairman Sun Hongbin will be diluted to under 25% from almost 40%. The company will also extend bond repayment to as long as 9 years. Abu Dhabi weighs bid for $1 billion PCCW fiber unit stake. Bloomberg. The Abu Dhabi Investment Authority, ADIA, is considering bidding for a stake in PCCW's fiber business. ADIA is in discussions for a significant minority stake in PCCW's fiber assets for around $1 billion. PCCW has been exploring selling a significant minority stake in its fiber business, which has drawn interest from Chinese investors as well as Middle Eastern funds. ADIA has been diversifying its portfolio with previous investments in Austrian power equipment maker INEO, German railcar lessor VTG, and Emerson Electric's climate technologies business. Shenzhen, Hong Kong to launch cross-border data verification platform. South China Morning Post. Shenzhen and Hong Kong will launch a verification platform for cross-border data using blockchain technology. The platform will verify the credibility of cross-border data based on the blockchain, and will initially focus on trials in cross-border finance between the two cities. The Bank of China and the Bank of East Asia will be among the first to use the platform. The platform will be built on distributed data transfer protocols and the mainland blockchain platform Fisco BCOS. The platform will not transfer or store cross-border data, but will simply conduct the verification process based on the hash value of the data. Wanda Properties says extension on $600 million bond repayment gains early consent from holders. Yahoo! Chinese real estate firm Wanda Properties International, a subsidiary of Dalian Wanda Group, has received early consent from bondholders to extend the repayment on a $600 million bond due in 2024. The filing in Hong Kong revealed that over 99.3% of the bondholders' aggregate principal amount voted in favor of the extension. Wanda Properties is still awaiting final approval to extend the payment date at a meeting of bondholders on December 13. Ladies and gentlemen, I'm Dr. Six, your resident observer from the 6 Degrees world. Let's dive into today's news. First up, Marina Bay Sands is looking to secure a loan of up to 10 billion Singapore dollars for its expansion plans. It seems they're betting on a post-pandemic rebound and an influx of tourists, particularly from mainland China. I guess they're hoping to hit the jackpot with this loan. In other news, Morgan Stanley's real estate banker focused on China, Lida Ren, has left the company amidst a decline in property deals in the country. It seems like the Chinese property market is going through a rough patch, and Ren is not the only one feeling the impact. Speaking of China, the mainland stocks have been sitting out the global rally in November. While markets around the world are surging, the CSI 300 index is down about 2% this month. I guess the Chinese stocks are not feeling the holiday spirit just yet. Meanwhile, Hong Kong stocks fell for a fifth day due to a contraction in Chinese manufacturing. It seems like the manufacturing woes are taking a toll on both the mainland and Hong Kong markets. Perhaps they need to find a way to fix this glitch in the system. In a surprising turn of events, Alibaba Group is set to lose its position as China's most valuable e-commerce firm to upstart PDD. It seems like Alibaba is facing some challenges after Beijing's crackdown on the tech sector. The tides are changing in the Chinese internet industry, and Alibaba is feeling the heat. Moving on, Chinese automaker Geely's premium electric vehicle brand, Zeekr, has put its US IPO on hold due to mismatched valuation expectations. I guess they need to charge up their plans and wait for more favorable market conditions. It's a bumpy road for Zeekr. Now, let's talk about Hong Kong's future. According to Daryl Ing, chairman of the Hong Kong ASEAN Foundation, the city should leverage its strengths as China's most international and cosmopolitan city. Ng believes Hong Kong should continue to connect China with the world and attract talent and capital from Southeast Asia. It seems like the city is looking for some new opportunities to shine. In the world of bonds, foreign investors are flocking to higher-yielding Asian bonds, such as those in Indonesia and India. It seems like the weakening dollar is making these bonds more attractive. Meanwhile, South Korea and Thai bonds are experiencing a slowdown in inflows. I guess investors are being a bit more picky when it comes to their bond choices. In an interesting move, China International Capital Corp. (CICC) has banned its analysts from making bearish calls on the economy or markets. They are also advised to avoid flaunting their wealth. It seems like CICC wants to keep a positive image and avoid any unwanted attention. Who knew being a bear could be so frowned upon? On a lighter note, Louis Vuitton is set to hold its first runway show in Hong Kong, boosting the city's reputation as a global fashion hub. It's a glitzy event that will showcase the first pre-fall collection by Pharrell Williams. Looks like Hong Kong is ready to strut its stuff on the fashion stage. Moving on to the cost of living, Singapore and Zurich have overtaken New York as the world's most expensive cities. I guess if you want to live the high life, you'll have to pay the high price. Meanwhile, Chinese cities have fallen in the rankings due to the country's slow recovery. It seems like China's post-pandemic hangover is taking a toll on its consumer demand. In a sign of hope for China's shattered property bond market, Sunac China has secured a restructuring deal with creditors. This marks the first major agreement by a Chinese builder since Beijing's push to deleverage the industry. It seems like Sunac has found a way to weather the storm. Maybe they should give some tips to the other struggling developers. Moving on to investments, the Abu Dhabi Investment Authority, ADIA, is considering bidding for a stake in PCCW's fiber business. It seems like ADIA wants to get in on the fiber action. Let's see if they can make a good connection with PCCW. In an effort to enhance cross-border data verification, Shenzhen and Hong Kong are launching a platform that will use blockchain technology. It's a digital handshake between the two cities to ensure the credibility of cross-border data. I guess they want to make sure that the data is not lost in translation. Lastly, Wanda Properties International has gained early consent from bondholders to extend the repayment on a $600 million bond. It seems like Wanda Properties has bought themselves some more time. Let's see if they can seal the deal at the bondholders' meeting. That's all for today's news. Remember, it's not just about the facts, it's about the fun. Now, it's your turn. What are your thoughts on these stories? Do you think Marina Bay Sands will hit the jackpot with their loan? Will Alibaba be able to bounce back from the crackdown? Let's discuss. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.